Welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. You know, I was dragging anchor this morning until I got some coffee in me.
Right.
How about you?
Yeah, hopefully it didn't result in any oil spills.
It did not. Let's go.
So Tinder rejection index here for the United States. The blue line is the current year. Tinder rejection rate sitting currently around 20.89%, still historically high, but about 4 percentage points below last year and about 15 percentage points above 2019. We're definitely
not exactly
still
in the middle.
Yeah, we're still very much closer to the 2020 scenario than we are the 2019 scenario by far. Kind of a flat line right now. Like, we're really kind of hovering down. If you look at some of these historical patterns, this is not unusual. You see these dips, a little exaggerated. It's hard to see this one because of the scale. But there was a little bit of a dip in 2019. Fall breaks do occur. They take vacations. Doesn't matter how much needs to be done. They're going to take vacations.
That's exactly right.
We see this small little blip. It's barely noticeable in most years, and probably not very noticeable in this year. But we are seeing a little bit of a dip here. It looks like it's relatively normal, maybe a week and a half or so before we start to see the peak season influence start to show up a little bit more.
Yeah.
I think at this point, Mike, that carriers basically are just kind of churning out. Like, they're just kind of showing up until they're not going to, until.
It's what it feels like, right? It's like, okay, we're into this solid routine. We haven't had a major disruption in a while, so people are getting, they're rolling. Right?
Yeah.
That's what it feels like.
Right.
I agree with you.
Right. We've got a few more weeks. Let's look at the demand side thing just to kind of add some more color to this. I've got IOTI, the inbound TEUs index. Big change in direction here versus last week. We really saw this. Now, there's two scenarios that play out. This, again, the IOTI, very leading indicator for surface transportation demand.
And that's the blue.
That's in the blue. We've got the OTVI here in the green. That's the surface truckload demand, tender requests coming out. A little bit of a dip to start October, like we talked about with tender rejections.
A little bit of a bounce up at the bottom.
We'll probably see a little bit of an uptick here in the next coming weeks or so. But this guy right here has a 30 to 60 day lead time on
so these are TEUs. Volumes. These are not shipments. They're TEUs that are coming in.
And we saw this big dip last week. We thought, okay, everybody's just giving up on Christmas at this point.
Because, Chinese factories are shut down. They got no electricity.
All the things that could possibly go. And now this week, huge reversal of trend, upswing to the point where we saw it in August, which that is traditional peak season.
That's traditional,
for the maritime side. This freight will probably not get here in time for Christmas. So this is a signal to watch. It could simply be a recovery from this. Maybe it was like Golden Week influence or some sort of time off. We're not sure.
That caused a lull and then now a peak coming back out of it.
Time will tell to see how sustainable this is. It's probably not very sustainable, but at the same time, it's still, if this goes back down to here, average it out, we're still way above where we were this time last year.
Yeah. It's going to take a lot more of a downward trend to reduce any type of the congestion or pressure that's out there for certain.
Exactly. Let's move on into the next chart of the spot rates. This is the one where everybody enjoys looking at the money. You see these spot rates here. A little downward trend on all our modes here. This is the reefer spot rate here. This is the van, pretty horizontal since Labor Day, excluding this little anomalous dip. Flatbed rates still churning right along. Anthony will be happy to see that
little bounce up still, a little bit there,
That's still churning. We did see an uptick in the FOTRI, the reefer or the flatbed rejection index here over the last few weeks. But they're still all kind of just turning along. We've seen this a little bit of a downward progression in reefer more than any of the others. But van
seems to be fairly flat.
We're flat. We're in a holding pattern. Just like we're seeing with our tender volumes, tender rejections, we're not seeing a dramatic change across the board in any specific area. Now, this doesn't mean that everything's moving sideways. It just means there's some going up, some coming down.
Exactly. And everything's kind of leveling out a little bit right now, right? But you still got these pockets of disruption and volatility that are happening around.
Exactly. Let's go ahead and tease the map chart the map for just a minute.
Let's do it.
Let's look at the weighted rejection index. We'll get into this a little bit.
And another one of those big red things.
Yeah, Atlanta showing deeper declines in the weekly change and rejection rate. Ontario, we're talking about those import volumes. in the blue, in one of the darker shades of blue. So anytime that one shows up in the blues, you got to pay attention to it.
Yeah, you do. You definitely do. I mean, look, it's a massive, massive market, and there's two of them right next to each other, sitting right here, and they interplay with each other. But
yeah, all that import volume, capacity congestion there. You never know what's going to happen out in Ontario. The largest amount of outbound freight volume in the United States, tightening signals this week.
Yeah, very much so, very much so. Thank you so much for all that. We'll catch up with you a little bit later in the next hour there, Zach.